to today's class. Today we are going to see trading, P&L and balance sheet under accountancy and bookkeeping. Right? Now, guys, understand trading account, P&L account and balance sheet are called as final accounts. Are called as what? Final accounts. Once you have done everything. If you see our previous video, starting from your bookkeeping, first process, documentation, then passing journal entries, preparation of ledger accounts, from there passing trial balances or preparing trial balances. Once trial balance is ready, what we will do, we will prepare the final accounts. The final accounts contain three components, that is trading or manufacturing account. Basically, if you are into manufacturing, they'll call it as manufacturing account. If you are into a trading company, then you will be called as trading account. That's it. So trading account. Second one is profit and loss statement or income statement or profit and loss account. Third one, you have balance sheet. So these are all the components of what? Final accounts. You are having separately trading account, P&L account and balance sheet now. So these three things are nothing but final accounts. Preparation of these three things are nothing but what? Final accounts. All right. These three things are prepared together always, because trading account will show gross profit. The final result of trading account will be gross profit, and that will be transferred to P&L. So P&L will start from the gross profit or gross loss which we arrive from trading account. Alright. So once P&L is done, the results of the P&L will be either net profit or net loss, and that will be given to whom? Balance sheet. That will be transferred where? Balance sheet. So all the three are prepared together. Are you getting it? So this is called as what? Final accounts. Now we will see one by one what is trading account, what and all will come there, what is P&L and what and all will come there, what is a balance sheet and what and all will come there. That's it. Shall we see? All right. Now, when we talk about the statements, profit and loss, any organization, the main thing is whether you are earning a profit or loss. All right. Now, that profit and loss is divided into two categories or two statements under final account. One is trading account and one is P&L account. So, trading account talks about gross profit, P&L talks about net profit. At last, net profit is the final figure, but that arrives from the gross profit. All right. So, we'll see how it works. Right. Now, what is meant by trading account? Guys, trading account means where... You know what is meant by trading? It is buying and selling actually. All right. So trading account shows purchases and sales of your goods or your whatever your item is. All right. Now in trading account, what will happen? All your direct expenses related to your production, related to your trading, manufacturing to production, you can say. If it is a trading, then you can use the word trading. All right. Correct? Now, all your direct expenses related to your production or related to your trading activity and all your direct incomes related from your direct, operational activities or, trading activities, that will be entered in which account? Trading account. So, direct incomes and direct expenses will be entered in trading account. So, the net result, income minus expense, it will be there, no? Because you have direct income and you have what? Direct expense. So, income minus expense would be what? Gross profit or gross loss. When you have a gross profit, if income is more than expenses, then you will be having a gross profit. If income is less than your expenses, then you will be having a gross loss, and this will be transferred to where? P&L account. This will be transferred where? P&L account. So please understand, so trading account is a simple account which have only what? All your direct expenses and direct incomes, which is related to your production activity or which is related to your main course of, that is trading account, main course of business, that is trading activity. All right, guys, why I always stress on production and trading means it may be a manufacturing account or it may be a trading account. That is why. And the point here is only your direct expenses and incomes. All right. Now we'll see the format. I have given the format. See here, trading account for the year ending. So it is prepared for a particular period, guys. So always you will have what? Trading account for the year ending or for the period ending. So you will prepare for a particular period, duration. It is not on a particular date. It is for a particular period, during a period. All right. So trading and P&L account will be prepared for a certain period, or during that period, whatever you have done, whatever expenses you have incurred and whatever incomes you have earned, that will be portrayed on that trading and P&L account. All right. So it is not on one particular day. It is for a particular period. So always we use the word trading account for the year ending. So 31st March 2003 or whatever that year is, you can use it. See here on the debit side, again it is a T format. We call this as T format, and our left hand side will always be debit and right hand side will always be our credit side. All right. So left hand side will always be what? Debit. Right hand side will be credit. And particulars, rupees. This is inner column and outer column. Particulars, rupees and rupees. If you see debit side, all your expenses, all right, plus opening stock will be there. If you see your credit side, all your direct incomes plus closing stock. Guys, apart from this, nothing else will come in trading account. Please understand. All right. Only the direct expenses related to your purchases, related to your production will come here. Apart from that, nothing else will come. All right. So now opening stock, purchases. If you have any purchase returns, then you minus it and put net purchases. Wages to the laborers who indulge in the production activity. Freight means transportation charges for procuring your products for production. Again, carriage inwards also it is similar to the transportation cost. Clearing charges, again when you are importing, that time you will pay to your customs brokers or something. So clearing charges. Packing charges, again for purchase of goods. Dock dues, again if you have any customs or any imports or something, where if you have stored in a what can you say, like if you put it in a godown and a customs godown or something, you have to pay what? Dock dues. Dock dues means in case of imports it will come. So dock dues. Power means what? Electricity, which relates to factory. See the word here, I use the word factory. Suppose if it is for admin office, it will go to P&L statement, not for trading, because factory is directly related to your production activity. Then octroi duty, it is while you are going, guys, how we have now, entry from one place to one state to another state or municipality, you will pay taxes. These are all very old, duties. Duty means what? Taxes, guys. So octroi duty. All right, when you're moving from one state to another state or one place to another place, you'll be paying some municipal taxes for that. So that, because that is for your purchases or that is directly related to your production, so that will come in your trading account. So to octroi duty. Now, if you see on credit side, sales means whatever you sold, that amount, minus if there is any returns from the consumer. So once you do that, you will get net sales. Then closing stock. Closing stock means your inventory as on 31st March, that day, what was your value of the inventory? That will be your closing stock. This is opening stock, the year beginning, whatever you had. All right, year beginning, whatever inventory you have it in your hand, then that will be called as opening stock. Year end, whatever inventory you are having in your hand, that is called closing stock. Opening stock will come on the debit side, closing stock will come on the credit side. That's it. Now, once you balance it, if credit side is higher than debit side, then you will have gross profit, and that is transferred to what? P&L account. If debit side is greater than credit side, which means your expenses are greater than incomes, then you will have what? Gross loss, and the gross loss, again it will be transferred to your P&L account. This is the format for what? Trading account. I repeat, it is a simple account where you will enter all your direct expenses related to your production or trading activity and all your direct incomes. Along with that, you will enter opening stock on the debit side and closing stock on the credit side. All the expenses will be coming on the debit side. All the incomes will be coming on the credit side. That's it. If credit side is higher, then it is gross profit. If debit side is higher, then it is a gross loss. Both the things will be transferred to P&L. This is all about your trading account. Next, P&L. Again, P&L shows the net profit or loss for the business for that particular period. All right. So all other expenses, guys, apart from your direct expenses, indirect expenses will be there. No, advertisement cost, marketing cost, sales personnel wages, security personnel wage, salaries, and then you can say depreciation, and then for example you have so many other expenses apart from that, right? You may purchase water for your laborers, so water charges. You may purchase any office expenses, sundry expenses will be there, so many things will be there. You will allow discounts to your consumers, and then you may have bad debts also. All those things, where it will come in profit and loss statement. All right, so apart from all other expenses which was not entered in trading account, or all other incomes which are not entered in the trading account, it will come under which account? Profit and loss account. So the net result would be either net profit or net loss, which will be transferred to the balance sheet under the heading reserves and surplus, or retained earnings, or reserves and surplus, or it may be added to the capital in case of proprietorship. All right. So now we will see the format for the P&L account, guys. See here, if it is a gross profit, again the same format, profit and loss for the year ended so and so. Now debit, credit, same side, left hand side debit, right hand side credit, particulars rupees, particulars rupees. That's it. Now credit side, what I wrote, gross profit. From trading account, what you got? Gross profit. So this is income. Now again the same rule, all the incomes will be on the credit side, all the expenses will be on the debit side. All right, now credit side, gross profit is an income to us, right? So I gave it on the credit side, the gross profit. This one has I taken from where? I have taken from the trading account. All right, now see, commission earned, rental received, interest received, discount received. All right, so all these things are received. Is it directly related to your activity? I mean, your trading activity? No, these are all other incomes, indirect incomes I can call. All right, so all the indirect incomes I parked it under where? Credit side of my P&L. All right, now if you see here debit side, your trading account, if it is a gross loss, then it will come in the debit side. Gross loss is loss to you, so all expenses and losses will be what? On the debited side, or debit side, or debited, or on the debit side. Correct? That is what we have read it in our golden rules. Now gross loss will be on the debit side. So I wrote the balances brought down from trading account, gross loss. After that, I wrote salaries paid to office personals, rent and rates, stationeries, postage, insurance, repairs, trading expenses, office expenses, interest paid, bank charges, sundry expenses, commission paid, discount allowed, advertisement, carriage outwards, traveling expenses, distribution, repacking, bad debts, depreciation. If you see here, you have, this is not a exhaustive list, guys. I just gave you few examples here. You have so many other expenses which cannot be parked under trading account. All other expenses, indirect expenses, will be charged under P&L account. These are all examples. Insurance, repairs, postage, telegram, internet charges, telephone expenses, communication expenses, traveling expenses, hotel expenses, food expenses. You have so many things. All those things will come under which account? P&L account. So in simple, all your indirect expenses will be debited in your P&L. All your indirect incomes will be credited in your P&L. That's it. So that is called P&L account. And if you have a gross profit, it will be credited. And if you have a gross loss, it will be debited on your P&L. Then once you find out everything, once you parked everything, if your credit side is higher, then you will have net profit, and it will be transferred to your capital account, that is balance sheet. If your debit side is higher, then you will end up in net loss. Debit side is nothing but expenses. Credit side is nothing but incomes. So if expenses are greater than income, then it is net loss. If incomes are greater than expenses, then it is net profit. This thing will be transferred to your balance sheet under capital account. That's it. This is the format for what? P&L. Now, last one is what? Balance sheet. So balance sheet is defined as what? It is a statement, guys, which shows the affairs of the company, which means how much assets the company has owned and how much liability the company has to pay. That's it. So it is a statement which it tells us on a particular date. On a particular date. It is not for the entire period. It is for a particular date. As on that particular date, how much the company has in their hand as an asset and how much the company has to pay to the outsiders. That is called assets and liabilities, and that statement is called balance sheet. That's it. See here, balance sheet is defined as a statement which sets out what? Sets out the assets and liabilities of the business firm, which serves to ascertain the financial position of the same on any particular date. So as on that date, it is not for a period, guys. It is for one single date. As on that date, what is your status? How much you have and how much you have to pay. That's it. So here basically balance sheet will debit or balance sheet will tell you what are all the assets the company owns and what are the liabilities the company owes. All right. There are two different things, own and owe. All right. Owns means asset, owes means liability. All right. Now, why there is a need for preparing is first thing you have to know the value of what? Assets. How much assets you have? What are the nature? Whether it is a fixed asset or whether it is a current asset. Whether you have, too much of current assets or too much of fixed assets. Whether you have any liabilities. What is a liability? How much you have to pay within 6 months? How much you have to pay? Current liabilities means within a year. How much you have to pay it in a short term? How much you have long term? All right. And what is the position of the owner's capital, whether he is in a good position or he has lost his equity or he has lost his capital, everything is lost. All those things you can come to know by preparing what? Balance sheet. By looking at a balance sheet of a firm or a company or an organization, we can say whether they are performing good or bad. All right. Now, this is types I said. Rather than types, I can say that preparation of balance sheet or format of balance sheet can be presented in two forms. One is horizontal form and one is vertical form. Horizontal means like this. How we have this P&L trading, the same way. Horizontal means this way. Vertical means, you remember trial balance. We did trial balance. Now it is like a statement, right? Trial balance, particulars, amount. That's it. So it's just like a report format. That's it. So one is horizontal form and one is vertical form. I have given the format for everything. So now horizontal format. See here, balance sheet of so and so as on. Then the left hand side will always be liabilities. Right hand side will always be assets. All right. So now rupees here. So again, I repeat, left hand side will always what? Liabilities. Right hand side will always be assets. Now liabilities, creditors, bills payable, bank OD, outstanding expenses, loans, reserve fund, capital. All right. Now how much I have invested? Net profit. What is it? Add net profit. If at all I have net profit, this is from which statement, guys? P&L statement, you remember? So add, if I have a net profit, add to my capital. If I have a net loss, minus it from my capital. And if I did any drawings withdrawn from the business, then that also you have to minus it from my capital. Then less income tax. This is just adjusted entry. If you want to pay any taxes, then minus that and you will put the net figure here. This is what a capital. This is what capital. Then if you add, you will have a total here. Come to asset side. Cash in hand, cash at bank balances, bills receivable, debtors, investments, whatever the company has invested, whatever the organization has invested, their closing stock. See guys, this closing stock will appear in two places. One will be in the trading account credit side and one will be in the balance sheet. Next, prepaid expenses, furnitures and fittings, plant and machinery, land and buildings, business premises, patents, goodwill. All these things are what? Assets of an organization. We have studied all these things under various terms and definitions in our previous video. Very basic concepts of accounting itself, we have studied all these things. These are all assets. Then if I total this up, guys, understand, it should match. Assets should equal to your liabilities. If you remember our accounting equation approach, in that I have given assets is equal to liabilities plus capital. Correct? So both the sides, it should match. This is the horizontal format. This one is vertical format, guys. It is like a statement type. See here, balance sheet as on, particulars, rupees. See here, I have given heading as current assets. So now I'll write all the current assets. Now what is a total current asset? Next, less current liabilities. So I have given current assets, I have given current liabilities. I'll minus that. So now net working capital. Guys, again I'm telling you, this is not the, is this the exact format we have to prepare? Means it is depending upon the company to company. Few companies will, I mean, organization to organization. Few people will give fixed assets first, then current assets, and then total assets, and then they'll talk about liabilities. All right. Here I have given first current assets minus current liabilities. So it will give me net working capital. All right. After that, I will add long in term investments and then fixed assets. So what happens? Total fixed assets, and I'll get capital employed. All right. Then from there, I'll minus long term liabilities, and then I'll get net assets. And then I'll add my owner's capital and profit and loss, that is reserves and surplus. This is called proprietor's fund. So it will match. That's it. It is not matching. It will be equal. So net assets should be equal. Net assets is nothing but what, guys? Please understand. Assets is equal to liabilities plus capital. Now, net asset is equal to assets minus liability. All right. Now, see here, assets minus liability is equal to what? Capital. If I rechange this phrase, I bring this liability this side. So, asset minus liability is equal to what? Capital. That is what I am proving here. So, this is my net asset. Correct? Here is my net asset. See here. Correct? How I got net asset? Current asset minus current liability. To that, I added all my fixed assets minus long-term liabilities, non-current liabilities. So what happens? There are two types of liabilities, no? Non-current and current. The same way, current assets and fixed assets. So at last, what I'm doing? Total assets, total liabilities, and I'm minusing assets from minus liability. I got net assets. Net assets should match with what? Owner's equity. Capital is nothing but owner's equity. See here, owner's capital and reserves and surplus. If I add, it will come proprietor's fund, and it will match. You're getting it? And this is just, I've given this just to have a proper idea about how much is my working capital, how much is my long-term funds, how much is my long-term assets. All right. So if you ask me whether is this the format do we need to follow? No. You have, we are free to prepare how to prepare our vertical format. Few organizations will prepare like this. See, the same way what they will do. They'll give fixed assets first, then they'll give current assets. So now they will write total assets. All right. Then they'll write long-term liability, short-term current liability. Then they'll write total liability, and they will write equity. That is owner's funds, capital. Then they'll add these two. They'll write here capital plus liability, and this will match. You're getting it? So vertical format is nothing but it is a statement or it is a report type. That's it. Whereas horizontal, you prepare like a account format, T format. Left hand side it will be liabilities, right hand side it will be assets. That's it. So this is how we will prepare what? Balance sheet. I have given an example, guys. I have given a trial balance and I prepared trading P&L and balance sheet for your understanding. See here, opening stock. Opening stock, where it will come? Trading account, debit side, correct? Yes. See here, trading account, opening stock, I parked it here. Next, purchases. Purchases again, where it will come? Trading account, debit side. Again, see, purchases, debit side. Debit side I am having trading account. All right, I put. Discount allowed. Discount allowed is an expense to you. Is it a direct expense or indirect expense? Indirect expense. So where it has to go? P&L account, debit side. Again, it is an expense. So see here, to discount 1,300. Next, wages. Again, wages is a direct expenses. Where it has to go? Trading account. So trading account, to wages, debit side, the amount. Sales. Sales I have 30,000. It is a direct income. So trading account, credit side, sales. 30,000. Next, salaries. Salaries again 2,000, where it will come? Indirect expense, debit side, P&L statement. 2 salaries, 2,000. Traveling expenses, again indirect expense, P&L. Traveling expenses, debit side, 400. Commission, 425. Again, where it will come? Indirect expenses, P&L, debit side. Next, carriage inwards. Do you remember this? It will come where? Trading account. Carriage inwards will always come under trading account. So trading account, debit side, carriage inwards because it is an expense. Administration expenses, indirect expenses, and it will go to P&L statement. So administration expenses 105, debit side. Trade expenses, again it will go to indirect expenses and P&L statement, debit side 600 since it is an expense. Next one, building. It is what? Asset. Furniture, asset. Debtors, asset. Creditors, liability. Capital, asset. Capital comes under liability side, but it's a owner's fund. Cash, asset. Now I missed out this interest, guys. Interest, it is in debit side, which means it is an expense to us. So I parked it under indirect expenses, interest 250. Right? Now I have parked everything. See here, stock as on 31st March is 6,000, which is closing stock. Where it will come? It will come on your trading account, right? So which is side? Credit side. So I parked it under credit side, closing stock. Now shall I balance the trading account? If I balance the trading account, my income side is greater than my expense side. So I had a gross profit. So 36,000, I'll write both the sides 36,000, 36,000. And then what I'll do, I'll minus all my expenses and then I arrived at a figure called 7475, which is called as gross profit. And this will be taken to the credit side of your P&L statement, gross profit. I don't have any other indirect incomes, only this much. So now from this gross profit, I minus all my indirect expenses. Then I'll arrive at one figure 2395. That is nothing but my net profit. This will be transferred to my balance sheet under capital account. So this is how you will prepare trading and P&L account. Alright, so what I did, I parked all the direct expenses and incomes on the trading account, and I parked all the indirect expenses and gross profit I transferred to P&L statement. Then I found out what is net profit. Now I'm moving ahead with balance sheet. See here, creditors, I have whatever the amount they have given. Capital, opening capital, I have 13,000 and net profit for the year is how much? 2,395. Add these two, so it is 15,395. Apart from these two, I don't have anything on my liability side. Asset side, if you see, I have cash, debtors, stock, furniture, and building. Guys, understand, this stock represents what? Closing stock. Closing stock always appear in two sides. One will be on the two times. One will be on the credit side of your trading account and one will be on the asset side of your balance sheet. Guys, anything which is appearing after your trial balance, those adjustment entries, that will always have double effect. Two times it will reflect in your financial statement. One time either it will be on your trading and P&L and one time it will be on your balance sheet if it impacts nominal accounts. All right. So now this is closing stock. Now if I add both the sides, it will match. Definitely it must match, it will match. And that is how we will prepare the final accounts. All right. Now if you ask me, is it the format for everybody? Means no. For companies, like, for companies you have Schedule 3, like which is prescribed by the Companies Act 2013. For electricity, insurance and banking companies, they have their separate acts. Electricity, we have Electricity Act. Insurance companies, we have Insurance Act. And banking companies, we have Banking Regulation Act. So under those acts, they have given how you have to prepare this trading P&L and balance sheet. So you have to follow their own formats while preparing the financial statements for these companies. For other than these three companies, electricity, insurance, banking, for all other companies, they have to follow Indian Companies Act 2013. All right. I hope you understood the trading P&L and balance